Hi friends, in today's video I am going to share with you why confusing volatility with risk in the end will make you poor. So let's dive right in. After spending 13 years in the financial planning industry, I have already seen a lot of people mistaken regarding about risk and volatility. So this is the exact reason why it might keep you poor. The single biggest reason why most people don't dare to invest is actually due to they are fearful of risk. They always thought that investing is very risky, they can lose all their money, or maybe investing is very volatile. But this thinking framework is not going to be beneficial for you in the long run. So let me explain. So I have done a quick search on this. So we are looking in terms of the volatility of a TLT, which is actually the 20 years government bond in the US. So volatility for TLT is actually about 13% for the past 10 years. However, the cumulative return that TLT provided was only a paltry of negative 0.3 to 0.8%, which means that for the past 10 years, if you have invested money in a 20 years treasury bond, you would have lost money. And what about the S&P 500? So S&P 500 annualized volatility for the past 10 years was about 16%, so it's actually slightly higher. However, the cumulative return is about 240 to 280% for the past 10 years. So this is where the problem comes in. So for people who are in search of low volatility, they do not want much risk, they would have tried to go for the safer route. But what seems safe in the end, it is much more riskier. Because for me, in terms of the definition of risk, the most important thing is I want to know at the end of 10, 20 or 30 years, would my money have grown? Because the goal for me is not to reduce volatility, because I don't see volatility as a risk. But what is risky to me is that after 10 or 20 years, I only see a paltry 1 to 2% per annum. This would have meant that my money have not worked as hard as it should be, and I can't beat inflation. And that itself is risky to me. So defining your risk is very important, because don't be afraid of investing if you find that you are afraid of price movement, because price movement is expected on a day-to-day basis. But the important part is you would have to know that in the investment itself have to make sense, meaning in the long run it has to grow. Then the next question it might be, then Vincent, how are you so confident that the stock market is going to go up in the long run? And of course, there are some skill set involved in picking the right companies or even picking the right markets. But if we go in terms of first principle thinking, let's think about it. For whatever products or services that you have been using, have you ever seen the prices drop? If you have not seen the prices drop in terms of, let's say, the services that you're using or the products that you are using, likelihood it means that these companies that are charging you are actually inflating their prices. And if the prices kept on increasing, fundamentally revenue of the company is increasing. And if these companies are efficient in using their money and making profits, it also means that their earnings might be increasing. So a company who is earning a much higher earnings indirectly will also lead to the stock prices increasing in the long run. Hence, I'm not so afraid of the short-term volatility, and I don't think of that as a risk. But more of what's risky to me is the 1% fixed deposit, which I know that likelihood I will not be beating the inflation anytime soon. And this wrong perspective of risk, my friend, might be the thing that is stopping you from investing and stopping you from becoming rich. So my solution to you is more on start to define what is volatility to you, and make sure the worldview that you have is something that is really serving you, rather than stopping you from achieving what you really want. If you want to become financially free, the best way that you can do is to start investing early and put your money to work. If you have any questions regarding about this video, or maybe in terms of the definition of risk, I would love to have a discussion with you in the comment section below. And let's say if you enjoyed this video today, do hit on the like and subscribe button so that more videos like this will be recommended to you. So I'll see you in the next video soon.